got lots of real estate questions. Should I downsize? What improvements do I need to make before I sell? What will Connecticut's real estate market be like in 6 months? It's time for The Real Estate Show with Pat Civitella. He's got your answers. Call 203-333-9422. Now, here's your host, Pat Civitella.
Hello, and good evening to everyone, and thanks for tuning in to The Real Estate Show. I'm your host, Pat Civitella, over 35 years' experience in the real estate investing game. And this show is about creating long-term wealth through real estate investing and producing passive and residual income with real estate. I'm going to share with you my knowledge and offer my guidance and some inside information and all the information I've gathered in the last 35 years. I can also show you how to develop and generate a secondary or primary income through real estate investing. And also we talk about home improvement tips to increase the value of your home or property. And so I encourage you, if the show does go quick, so if you have any calls, please call in at the beginning of the show because it's only a half hour. So any questions, please call in as soon as possible. The number here is 203-333-9422. That's 203-333-WICC here on 600 AM, and it's 107.3 FM. Okay, and we want to thank, this show is brought to you by our friends at 1-800-MR-JUNKER. They will take the good, the bad, and the ugly. No need to do anything except for point for what you want them to take. Either one item, they'll do a complete house or business clean out. 1-800-MR-JUNKER is ready to serve you. They've been serving Fairfield and New Haven counties for over 15 years. Please call our friends there and mention my name, Pat Civitella, on WICC, and you'll get 10% off your job. And that's 1-800-MR-JUNKER for all your junk and cleanup removal. And they also do offer same-day service available. They're hot tub removal specialist. And also they do a free junk car removal service. Again, call 1-800-MR-JUNKER today, and you will be happy that you did. Okay. What happened this week, Rich? This weekend? Oh, I'm sorry. I'm going to take a step backward. I skipped a page here.
What happened to
I made all my notes before the show. I spent like an hour out there lining everything up, and I still skipped over
one
a page.
comes before two, and then three after that.
All right. Before we get into the show, how to get a hold of me, because, I had quite a few calls this week and emails, and I'm going to just go over that real quick. 203-736-2484 is my office number. Again, it's 203-736-2484 is my office number. You can call anytime, even after hours, and leave a message. My email is patcivitella@gmail.com. That's PATCIVITELLA@gmail.com. And also you can reach me through our Facebook group, which is called Connecticut Real Estate Investors Group. You can reach me through that avenue too, or source. Also, if you have any interest in buying or selling real estate, residential, commercial, industrial, you have any questions or concerns, please feel free to call me. Again, 203-736-2484 is the best number to reach me, and I'd be happy to give you no obligation price opinion or how to get the most value for your sale, or if you're looking to purchase or get you the best deal for your purchase. Again, if you have any questions, concerns, call me at my office at 203-736-2484, and I'll definitely get back to you. All right, now we go to page 3, Rich. All right, so I just wanted to talk real quick about this past weekend. There was Pirates Day in Milford, downtown Milford. I don't know if you were aware of that, Rich, but it's a great event that the Downtown Merchant Associations put together. And I'm not sure how many years they've been doing it, but this is my second year involved. I actually was invited last year, my first time. Had a great time. I was able to go on the ship and participate and actually dress up as a pirate and come in for the landing with all the other pirates on the ship. And yeah, and my swords and your bead and everything else. So we had a a great time, and my granddaughters look forward for me coming in on the ship, and there's probably hundreds of people and kids there waiting, and it's a really, really nice time, and I wanted to give a shout-out to the Downtown Milford Merchants Association, and also especially I want to thank Bud and Tina Franks from Adversa Real Estate for inviting me on the event. I really appreciate that, and my granddaughters love it also. So I wanted to just bring that up today and give a little quick plug for that. Okay, next on the agenda is we have a couple of properties in Shelton available. They're both commercial properties in downtown Shelton. I have a small commercial space that was previously a beauty shop for over 30 years that we have available if anybody's interested in either a beauty shop or nail salon or any type of similar business. Give us a call at 203-736-2484. And then I have a space right next to it. It's approximately about 800 square feet. And that was previously used as a computer, I'm not sure if it was repair and sale type of business, but, and that's all on, street level, storefront space available. Again, if anybody has any interest in those two, please call my office at 203-736-2484. Okay, now we're going to get into the show. First things up, Rich, I have a new market update for the area, and this is for the last month. And this is for New Haven County, Fairfield County, and then I always do Milford because that's where the town I live in, so that's why I bring in those stats. So the stats for this past month, for the last 30 days, New Haven County, days on the market, it's been 26 days. The average sale price in New Haven County is $448,000. Percentage of list price received in New Haven County is almost 103%, Rich. So everything is 100% and above. So talk about a seller's market. I mean, it's still unbelievable.
That's when you want to sell.
Yeah, absolutely. But people don't realize you sell high, then you got to buy high.
Right. It just depends, unless you're actually moving from another area.
Right. And that's how I tell people, if you're moving from here to, let's say, down south where, the average price or some of the areas that we covered a couple shows ago that you can buy for, the average price is like $200,000 and the average selling price here is $448,000, $450,000. But if
you're moving out, a lot of people from New York City area immediate down in that.
Right.
It's really expensive, and they move up here. To us, it's still expensive, but to them, that's really
it's still
cheap.
It's still a bargain from the people from New York. But yeah, I mean, so you're getting, it's a seller's market. You're getting 100% of the asking price and above, which is phenomenal. But again, like it says, if you're unless you're going to an area that's less expensive or cost of living, and if you're going into a rental, and that's what a lot of people are doing. Some people are selling, and then they're going on the sideline and say, I'm going to rent for the next 2-3 years and see what the market does, And I've had quite a few people tell me that they've done that route.
That might be something that would be cheaper than having a mortgage, possibly, if you're renting and if you have a smaller space.
Absolutely. Absolutely. And I think on the last show, we talked about the lady that sent me an email about she was contemplating a condo, selling the house and doing a condo. And, when you're renting, you really have a lot less responsibilities, because if something, goes wrong or something's got to be maintained, so it is a good option for a lot of people. So back to the New Haven County stats. The inventory of homes is 1,064. And these stats are all from the MLS, by the way, the Smart MLS. Next would be Fairfield County. Days on the market is 10 days longer. It's 36 days on the market. Average sale price, Rich, is 1.1 from New Haven County. So it's almost over double that. Imagine that. 1.1.
Out of my price range.
1.1. List of price received is 103%. Inventory of homes, or a little more inventory in Fairfield County. We got 1,280 homes. Going to the market at glance in Milford, days on the market, 31 days, which is a little, about average out of the three. Average sale price in Milford is, take a guess at that, Rich. I gave you what New Haven County was, $448, and Fairfield was 1.1.
Yeah, that's going to be less than Fairfield County by a lot, I would guess, but probably not too much different from New Haven County.
Well,
but it's also our New Haven. You're talking about the city of New Haven, not New Haven, or is that?
No. That's New Haven County.
Oh,
yeah,
okay.
It's New Haven County and Fairfield County is the stats I'm giving. And then, like I said, I just do the city of Milford, just for reference.
So it could be a little bit more than the average for New Haven County because it's so close, right next door. It's got the river between that and Fairfield County.
You want to take a stab at it?
Over 500,000.
Yeah, it's actually 610,000.
Oh wow,
is the average sale price in Milford, and they're getting 100% of the asking price. And inventory of homes in Milford is 79. I mean, I remember when we were shopping and looking at Milford, and every time we looked for listings, I remember there was always like, this is going back 4 or 5 years ago. There was always like an inventory, I would say 150 to 180 homes. So now it's down to 79. So again, it's still.
I think it's a lot of that still market of people moving out of New York.
Yeah,
moving up this way.
Well, there's just an overall shortage of homes compared to again, it's supply and demand.
Right.
It's just a shortage of homes and can't meet up the demand on that. Okay, so that's the stats for this week, and then we're going to go right into the mailbag. Yeah, Mark, go ahead here. I'm going down the list here, Rich. Number 5, number 6, it says mailbag. Okay.
Those bullets do work.
It really does. I think I finally, I don't know how long this has been, 3-4 months now. I think I finally got this down to a good system.
Well, that was a suggestion that I got from the garden guy.
Yeah, you gave that to me, which is very good.
Because I see him do like what you're doing, where he's got sheets all over. And I said, I know he's got to have some kind of logical way that he goes through everything. Because I don't see him marking off or checking things off at all.
Okay, so I don't know. I might jump forward because I know we're coming up on a little break, but we'll get started on the first one here. Okay. So one email is from Josephine M. from Bridgeport, asks about property insurance on her 2-family home in Bridgeport. She rents out, and the insurance keeps going up. Has had the same agent company for 15 years. Any suggestions? Yes, I do have some suggestions, and I learned this early on that it does pay to shop around. Probably on the average, I would say 2 to 3 years to shop around and check to see that your prices are competitive, that you're getting from your local guy or girl for agent. But I did find that out, like I said, many years ago that, sometimes people say, you should stick with one agent or one company that, but it is important to check because when I did it back going 15 years ago, and we switched over from one company to the other. I think I saved back then. It was probably about $6,000, $7,000, $8,000, $9,000, across, for total on everything.
Do realtors specialize in a particular area? So you might have some that are just specific. They're more familiar with Milford, and then others are more familiar with, say, Bridgeport, Stratford, and that.
Yeah, that's a good question. Yeah, I think. There's a few answers to that. Most good realtors specialize in certain areas, like you're saying, Milford or New Haven or Trumbull. And I always talk about this on the show that real estate is local. You can't hire a real estate agent from Farmington to show you a property in Trumbull. It just doesn't make any sense. Or in Milford,
right? They're not going to be familiar with all the specifics.
Exactly, and it wouldn't make sense for that agent from Farmington to come down to Trumbull every day or every other day that you want to look at properties.
Unless you were dealing with, say, a big real estate company that has offices in different locations.
That's a different story. And I've also seen it that, there's relationship with these agents and real estate offices that they feel like, because they have family that's in the real estate business, so they call her. She's in Farmington. And this happened to one of my properties. The agent was in Farmington. The property was in Shelton, and she was going back and forth. And I'm thinking, she goes, well, it's my aunt's cousin, sister, and she, they feel obligated. And, I guess it depends on the agent. But, yes, a lot of agents specialize in specific markets, and you should get to know, like, if you want to buy in a specific area, type in Google, like, the best agent in Milford or the best agent in Trumbull, and I'm sure you'll get some type of listing. And then always again, going back to what I harp on all the time, is do your due diligence and start doing some homework and asking people and whoever either work or family or friends. But getting back to the insurance question on this property, Josephine, yes, I would definitely take a look around and call some other companies about insurance, because you'd be surprised on how much money sometimes you can save on these. And it's definitely worthwhile investigating, and go out there and check it out. We're going to go into a quick break, and we'll be right back.
Got real estate questions? Call 203-333-9422 and ask Uncle Pat.
Okay, welcome back to the show. Again, this is Pat Civitella on WICC 600 AM, 107.3 FM with the Real Estate Show, and I'm your host here. I think we left off with the insurance question from Josephine in Bridgeport. Definitely shop around that, because it is worth every 2 or 3 years to make sure your insurance is competitive, and you'll be surprised sometimes on that. Okay, next question we got, email. I guess it's a question too. Officer Joe from Naugatuck asks, My wife and I are first-time home buyers and have questions about 15-year mortgages and 30-year mortgages. And also, is it a good idea to make extra payments on the principal every month or once a year? Also, what about refinancing? How does that work? Can you explain in more details? Also, what about PMI payments? Thanks, Uncle Pat. Okay, this is quite a bit of a question here. Let's see here. First of all, Officer Joe, thank you for your service. We appreciate that. 15 and 30-year mortgages. I'm sure you're familiar with those, right, Rich?
Yeah, I had a 30-year mortgage on mine, but that's right up my alley, because that's what I did with the multiple payments.
Right,
is I pay a little extra. So.
Right. So, first of all, you need to get a good Officer Joe. You need to get a good mortgage guy or gal that first of all could explain to you the whole process. First of all, through 15-year mortgage notes, the price of that and the difference. The 30-year mortgage notes. There's also ARMs or adjustable rate mortgage notes. They have to be able to explain all those, the differences and the pros and cons to all that. After you've studied all that and realized the difference of it, because the cheapest one is probably going to be your ARM, your cheapest interest rate, because that's normally a 5-year term on the note, and then it readjusts every 5 years. So you'll get a lower rate up front on the mortgage. Let's say a 30 years probably today it's probably about around 7%. You could probably get an ARM. I would say, I haven't checked it with my mortgage guy, but I would say you could probably get an ARM probably close to 6%. But what you're doing with that is after 5 years, that's going to readjust. So you're kind of you're rolling the dice, and you're taking a chance on, like, in 5 years, is the interest rate's going to be up or are they going to be down? So if if you wanted to do that, or you're looking, it's not a long-term commitment that you're not thinking that you're going to be in that home for that many years, I would not do that ARM or the ARM mortgage rates on that. Between about the 15-year mortgage payments, 15-year and 30-year mortgage. Again, 15-year is going to be less expensive or a lower interest rate than a 30-year, but I always tell people or the younger kids is try to get into it with the least amount of money, and then if you feel you have the ability to make that extra payment, let's say you want to do it on a monthly basis or annual basis, I think it's easier to do it monthly. If let's say your mortgage payment, let's use round numbers, is $2,000 a month, and you could do an extra $200, so $2,200, so 2,000 times 12. So at the end of the 12 months, you're making an extra payment plus $200. And then make sure that that payment always goes against the principal, not the interest. That's what people don't understand. And again, ask your mortgage broker about that and make sure even when you go make that payment, you tell the bank or whatever, or you write it on a check saying, the extra amount, please apply to the principal. You're familiar with that, Rich?
Yeah, when I got mine, they had the booklets.
Right.
With the 12 pages
book.
for each month, and it had listed if you wanted to make additional, whether you put it towards your taxes or your interest or your principal, and I would mark it down. And I did that. I don't think I did it the first couple of years. A friend of mine told me about that. Yeah. And then I added either 150 or 200 extra every single month, and I cut my 30-year mortgage down to 18 years. I had it paid off.
Wow. That's
so
amazing.
I saved myself just under $100,000 in interest.
Wow. I was going to say, because that's a question I get often is if you baked an extra annual mortgage payment, I think last time I checked it saves you about 7 years on the back end if you make the extra, one-time payment, either monthly or annual payment. But on your case, you were paying more than the one month. You were probably paying two.
Probably, yeah. Because
like two at the end of the year.
Yeah, I just did the regular payment. My payments, I think, were like $900. Because again, this is going back 40 years ago.
Right.
And so I would add that extra $200 on. So I was paying like $1,100 a month. Something around
so
there.
2 times 12, you were paying an extra $2,400 a year.
Right.
So your mortgage payment was $900. So you were making almost 3 payments.
Right.
3 extra payments a year. That's why you were able to cut that down to 18 years.
I did my own math and figured out if I made the regular payments they had for 30 years and then what I did with the 18 years, I did, I saved an awful lot.
Absolutely. So, yes. So, again, if you could do it on a 30-year mortgage, go ahead and make the extra payment. And like I said, the last time I checked, it does knock off. If you make that one extra payment a year, which you either divide it by 12 months or you do it one lump sum, it does knock off about 6 to 7 years on the back end of the note. So definitely look into that. 15-year note is good too if you want to pay that extra, if you can afford to do the extra payment. And people have this mindset like, oh, I just want to get rid of that mortgage or, It all depends on what you do. See, I have a different mindset because I'm coming from the investor side. I'm not coming from the homeowner side or the individual side. So to me, to tie up that money, it doesn't make any sense to me. You know what I mean? So also he asked me about refinancing, in which he didn't know about, and a lot of people, I guess, don't know about. But and I'm sure you might know about it, Rich. But when you refinance the mortgage, you're starting back from zero. Because people always say, "Oh, just buy it now, and then in 2, 3, 5 years down the road, just refinance it." That's all good and well if the rates are low, but now the 5 years that you put into it is gonzo.
You're starting for the 30-year mortgage.
Yeah, you're starting from zero again, and all that money you paid and all those fees and everything else that was put into that loan is out the window. So and that's what people don't realize is you have to factor all those numbers in, because if you're not really, I think at one time the rule of thumb is you had to be saving, I think about 2% in order to make it worthwhile to refinance. So if you weren't saving that 2%, and it might be even higher today, it doesn't make any sense because you're already into the loan, let's say 5, 6, 7 years, and people, they refinance it. So now that 5, 6, 7 years of payments that you made are gone. Yeah, maybe the value of the home is higher, but still that money's gone, and then you got to start the clock all over again.
Because when I got mine, the regular interest rate was 18.5, but I got it for the first-time home buyer at 13.5.
Right.
So if I'd refinanced, it could have still been 16% or something.
Right.
So it had to drop like 8% just for me to make it a good deal.
Right. Exactly. So I'm really surprised about this refinancing question, and I do get it often that people are not aware of that. And he also asked me, I know we're running low already, about PMI payments. Do you know what that is, Rich?
No.
So what happens is when you're first time home buyer, and you probably had it on your note, a PMI, or maybe you didn't because it was a CHFA, but PMI is private mortgage insurance. What happens is when you're a first time home buyer and you're buying a property without the conventional 20% down, lenders feel like if you don't have enough skin in the game, they're going to take out a separate insurance policy, but you're going to be paying for it through your mortgage payments. So it's called a PMI insurance, which I don't know what it is today, but I remember years ago it was like an extra, $70 or it wasn't a lot of money, $70, $80 a month that was added onto your mortgage payment that covered the lender if you foreclosed on the mortgage.
I could see that more nowadays where properties are worth more. When I bought my property 40 years ago, it was a fraction of what they aren't worth nowadays.
Yeah, but do you remember?
So it would have been maybe a small.
Do you remember if you had a PMI payment?
I don't recall it being in there.
But like I said, it's automatically in there if it's under 20%. And also on the PMI, you have to remember that once that property does go to the value more than 20% of your equity, you could get that taken off. So, and I think we're running out of time already. So, Officer Joe, I think I just got to the first section of your question here answered. And I'm going to go right into some closing notes. Again, okay, 2 minutes. Again, if you need to get a hold of me, the best number is 203-736-2484. Again, it's 203-736-2484. And some closing notes. First, I have to say to my granddaughters, Mia Civitella and Juliana Rosa, Big Pop loves you. And hopefully we'll see you tomorrow again, I think. All right, closing notes. Buy assets, not liabilities. I say that all the time, but people still don't listen to me. Second, I know Rich is listening to this, is pay yourself first. And what that means is, pay yourself first, save money. Remember that you make a living from 9 to 5 and you become financially independent from 5 to midnight. That's why me and Rich are still here. Dig the well before you need it and be prepared. And remember, there's good debt and bad debt. And when you're buying assets, good debt is buying assets, not liabilities. Don't buy depreciating assets. Always stay positive. Again, it's hard to soar with the eagles when you're hanging around with those turkeys. And I know I had a comment from one of my listeners the other day. He said, "What's wrong with turkeys?" And there's nothing wrong with turkeys. I love turkeys too. So, buonasera a tutti. Alla prossima settimana. Addio. Thank you very much for tuning in to the Real Estate Show with me, your host, Pat Civitella. And God bless America, and we'll see you next week.